Hey traders, welcome back to another full hedge series video. Chart just populating for us. I'm going to do this one on the euro pound. If you are continually watching our YouTube videos, you're watching me film every single video in gains. It's because I've done this for a while. I've been taught by the best. And it's what I do every day. If you want results in your trading, join the others who are watching these videos and seeing us, turn any market swing, any market cycle into full gains via my hedging method. You can just go under this video and the link is right there. So I'm going to speed it up and I'll put it on the daily, just let it populate a little bit. It's just so we've got an idea of where we are. Okay, I've just picked a random date and loaded it up. And I think we'll go with this. So remember, just brief general rules so everyone understands, and it's easy for everyone to get. Of course, we have full portfolio plans within the trading mentor, but to keep things simple, I'm going to have a max size of 0.1. Okay, one mini lot, 10 micros, and that's going to set the boundary for how much I'm willing to get in on any position. I have to have a max size, I have to have a max drawdown, or I'm just going to keep trading forever, endlessly, in the same way. You have to draw the line at some point if you want to survive any market swing. So I'm going to go for max 1% drawdown as well, so $1,000, and we're going to go ahead and we're going to play. So you can see we're on the daily. Where is price sitting? Well, it's stalling. It looks a bit supported to the upside. So to begin with, I'm just going to go for a half size because we've fallen a reasonable way. 0.904, okay, to 86.7. All right, almost 400 pips. So that's fine for me. I'm going to get long. Okay, now you can still see price still fairly supported. A bit of a pop there and a push and then a stall. Okay, I am just going to take this one for early gains. Okay, $40 in. You'll notice from all these videos as well, I'm rarely wrong. Overall, I don't close out many losers. Price is still fairly low, so we're going to go for a fifth of max size because I can see momentum pushing through. I'm reading price action, and I know the price is supported to the upside. So it's likely some kind of harsh sentiment has just come in to the market, and that's why you're pushing up. So I'll go a little bit more this time, 0.04. Any significant push back under that, and I will be out of it because the momentum is sustained still. And there's a little bit of support just underneath that short. So it's still climbing, and I've still got ammunition left. I'll probably put the rest in back at the highs. Okay, now I've got the chance to hedge beforehand. Now what I will actually do is just close that for a tiny loss, because I actually just want to flip long now. I'm just going to make it a third of max size because you're not an awfully long way down. And any continuation back up, I would have happily taken that. Doesn't really matter. I can actually just immediately hedge this. I will just take a medium size again. So I've got a third of that back in one go. And any push up again, I'll hedge. So now we're coming back towards my former short. All right, now I can hedge again short. So I'm hedging the long I took and is out the money, and I'll close it. So now I've got that $16 of the 25. So I've almost hedged the whole thing. And now I'm just going to take something really small. And I don't want to add any more shorts until a lot higher. So $12 there gains. I can now look to add long. I've got a good lot of short side hedge gains on that former long. Anything under that short and I'm out. Well, I would have liked to be out. I don't know if I get the chance, but it doesn't matter. Like I said, I can work my way out. More gains there. I don't want to add short again just because I've got a local short. So I'm going to hold off. Now we're pushing up, and I'll kill it if we get above that long entry, which we haven't. And now we're starting to see a little bit of a range sideways movement trend. So take a light short. And this is typically when you're going to make the most money if it does continue to range. If it doesn't, I'll just kill that long. There we go. So I've got all the hedge gains from that, and I've exited it as well in gains anyway. So I didn't actually have to spend those hedge gains. But if I choose to now, I can spend them on these shorts should I get these shorts wrong. So I'm now deep 2, 2, and 3. Okay, it's a total of 0.07. Remember, my max size is 0.1, so it's a long way off. More gains there. Now, look what's happened. I've got 2 shorts out of the money. I'm $112 up, and I can spend 46 now if I want to, but I don't need to. I'm not desperate, so I can simply hedge long. Okay, I can exit that $16. Now, $16.57, you can see this former short is still out of the money. Now, if I want to be really risk averse, I could close it because I've just made the hedge gains. So that's what I will do. I'll close that, $108 in gains, 48 down, 60 net. I can add again higher up now because I closed the other one and probably claim back the money I just lost, or some of it, $9. And actually I will add again, but I will just drop the size one more. Okay, any significant push. Okay, there we go. Now I'm going to hedge this short long, and I'm going to kill it. So that's 1/8 perhaps of the money back. Remember, like I said, I can use the money I've just made on former positions anyway. Okay, so I'm going to add one more, and at this point I'm going to go for a bit higher. So I'm now 0.08 deep on a move of about 200 pips, which isn't that bad to be honest. And I can look to hedge. If we break these highs, there's probably going to be a run through up, so I can look to hedge to cover my risk. Okay, there you go. So we don't know how high we're going to go now. So I'm just going to make it very small, just in case that happens. Thank you. I still haven't got a max size. I think if I'm going to hedge, I need a bigger dip than this. So that's great. And I will actually just kill that off. And I'll just take a very light size. Any pushback up would have been out. It's just too slow. That's the caveat of speeding these up. Sometimes you are going to miss a lot. I want it a bit higher. No, didn't get it. Bit lower, and I'll kill for gains lightly there. Now I've got the option to add. I think I will, and I think I'll make it 0.4. Okay, so we're long. Anything drastically lower, and I will add again. Would have liked that in line with that support. You can see a big rejection there. That doesn't matter too much. If you come under our previous short to the lows, I'll kill it. Now I'm going to slow this down a bit because I'm missing a few trades here. Now I have got a 0.02 already, but I am going to add just in case. Okay, so momentum obviously there, but you can see the range forming. It's likely now sentiment has slowed, i.e. there's no reason to get massively long or short for this market at the moment. I'm just going to exit that because price looks supported somewhat to the upside. You can see the range is now bending a bit. Doesn't mean we won't fall lower, which it looks like we are. Under that, I will kill the short and I will flip long a bit more. You can see a very flat uptrend now forming over time. Bit lower and I'll kill that. No, we've not got it. I am going to add a bit short because market looks a bit subdued now. Not an awful lot of gains on that. I mean, the only reason why I'm doing that is because you can get in and out very quickly. So it's fairly worth, although you're taking smaller gains, you take a lot of them, it makes no difference. So close that as well. Now, do I want to buy? I think I will. If I take another 4, I've taken a max size of 0.1 over this spectrum of price. I think I'd rather have a swing move if I can. I'm going to speed it up a bit. So I'm going to take a light hedge now. I'm going to cover 1/5 of the overall volume, short. Anything higher, I'll do it again, I think, back towards these wicks. Okay, I can actually close that long out. And I'm going to add a tiny short there. Or did I just add too much? No, I didn't. Okay, exit again. And I think I will kill that because price looks supported and I've got reasonable gains in the bank anyway. Okay, so now we're looking like we're going to get tight. So I think what I'll do is I'll just take quick shorts and longs. Like I said, not much in terms of actual close profits on these, but there's a lot of them. Okay, so I'll take gains again. And I'm just doing this pure price action now. Like I said at the start, from years of doing this, you can sort of tell just literally by price orders what is likely to happen. Okay. And just to reiterate again, you can see those profits are small, but they're small because I'm taking lots of them rapidly. So instead of taking one larger size and having much higher risk, I'm taking much smaller sizes with lower risk and a lot more frequent gains. Because I know any big size is probably going to be unsustainable should the market just continue the way it wants, away from those entries. And it's likely, even if we blow up higher, I will be able to just exit anyway on former entries I got wrong because I've collected so many profits already. So a big drop under and I'll probably buy this. You can see that what's happening is you've got, again, mixed market sentiment. And by the way, if anyone's wondering as well, I will actually add again. I do use all time frames. I'm just using one because it's easier for me to film these videos. If I go into all different time frames as I do when I teach and when I trade myself, it's going to get confusing for people who don't learn from our method and are just watching these videos. Now, I would say with that, there is an aspect of don't try this at home. If you watch these videos and think, oh, you know what, I'm just going to go and do what Will's done, very likely you'll lose money. And I say that openly. A lot of people won't say that on educational videos, but I don't want it to happen to people. This is a skill you have to learn. You need exact portfolio requirements in terms of risk management. So drawdown per asset, drawdown per portfolio, sentiment rules, price action rules. The actual assets in your portfolio is very important. The balance across risk in your portfolio, the spacing between entries, the sizes, everything needs management right down to a T. And if you just don't have that, you'll struggle completely. You'll struggle. Okay. So that's just a warning. Price looks a bit subdued, so I'm going to just put a short in case it falls lower. If it doesn't, I'm not massively concerned, but I'd rather be a bit more safe. Looks like it's stumbling a bit, so any drop, we've had that and that. I can't pause it quick enough. I'd want to kill it. I'll tell you what, just exit it for $1. There you go, bit of a pop. Need it a bit higher to hedge short. And a bit slower for me to press the trigger. I'm going to slow it down a bit because I'm going to start to want to hedge. 246 taken, 144 down. So we're still 100 net. Now, I've still got, I could add a whole 0.1 because the fall is so big. But because of the risk and because of the gains taken, I'm just going to keep it small with 0.04. Close that. Market's still subdued, but price very low. So I can drop to a 0.02, nothing really happening with that, so I'll close it. And at this point, anything lower, and I'm looking for a swing long. Okay, and I want to see what the market looks like now. So we're coming to these lows, and I think what I'll do is I will actually take a bigger size because I've got room in the portfolio, room on this asset. Now, if price looks subdued, then I think I'll just kill it early. I've got the option to hedge, and I will, just to protect a little bit. So my net there is 0.04 now. Any pushback to the lows and I'm out short. Anything higher and I just look to work out of this failed trade. We're out for gains there. Anything under this low, see what we do have here is a bit of market reaction. Okay, telling us there could be long buyers. There you go, they come right through. And I've now got the opportunity to say to myself, well, what do I want to do here? Do I want to reduce? I think I will. Again, that takes a lot of training to know when to do that. but I'm just taking the opportunity to do so because I'm being more risk averse now. Now the price is looking to climb and is supported, so I will actually add, but I will add that amount only. Okay, very small gain there. I can swap to a hedge. And if we just keep rallying, the short I just took will be out the money, but it's not a big issue because my longs formally will be in the money. Okay, so dip back, light long, momentum is south to be fair. And if we go a bit lower, oh well, I'm out. Hedge again, buy again. Now the longs are getting dangerous at these lows because every reaction is doing nothing. So I'm not going to buy again after this unless you break that low. Speed it up. Okay, now I'm going to have a hedge in the market in play. Kill it, tiny gains. Okay, I'm going to hedge again on all of this sideways movement. Okay, so now we're getting a bit of momentum. Climbing price. All right, so I can take another hedge. And I think just in case, no, I will leave it in play because the drawdown's very low. So anything beating that, thank you, I'm out. Close that. I can probably actually close that. And then I can add long. And I can kill that. And then I'll add short again just to protect half my overall volume on the long side. I'm out of that. Now I can get long again. And I'm out of that. And then I can short again. And I'm out of that. Preempted that one. Oh, no, I didn't. I'm out. And I'm long again. And I'm out of that. And I think I will just hedge one more time. And at this point, on those gains, I've cleared up the mess, really. I mean, I could probably just do that, take one of them off, and I'll play from here. So now I've just got one position out of the money, and really what I'm waiting for is a larger market swing. I can still add. Of course, I can add actually a bit larger, but the market setup isn't fantastic to the long side anyway, because you are now just seeing a subdued downtrend, downside market. Light hedge 0.2, kill that as well. So now my net is just shy of $300. And I could probably just do this again. Okay, so if we just keep climbing, we'll get back towards where we want to be. I'm going to immediately hedge that former short because the momentum is there. To the upside. Okay, so we've fallen under that. I'll kill it off. Don't need to do anything just yet. In fact, I will actually just add another long. So you can see that, it's practically impossible for me to get over any max real drawdown unless you get a massive market swing. And I don't hedge, I don't do anything, I don't reduce. That's when that would be a problem. But because I'm always managing my equity through the market swing, I don't have that problem. I don't have to worry about it. I don't have to worry about what if the price goes here, what if it goes there, because the sizes are minuscule. Okay, and in a diverse portfolio, you can times your gains by everything in there. It wouldn't just be the euro pound you're trading. So if you watch this and think, oh, well, it's only $372, it's not. It's a lot more than that because it's based on your equity and the amount of assets in the portfolio. Typically, it's not going to be one asset. You're going to have anything from 3 to 15 probably. Okay, so price somewhat supported, light long there. Okay, a little push up. So now I'm not seeing anything decent for hedges just yet. That looks fairly supported again. Big burst up and I'll be out. Looks like it's waiting to do that. There you go. I can just hedge formally on those entries. Any big push higher and I'm out that long. And I can add short most probably. Still supported. Okay. So I'll kill that. And I've made enough money on both sides to get rid of that. I can then short again. So I'm moving the short up basically, so that if we do incur more drawdown, it's not really going to be a problem. Now price looks supported again, so I'm going to close that. At this point, because I've removed so many positions with all gains taken, DCA and hedge, I can just let things run a bit. So any significant push up and I'm out again. So price still supported. You can see it's not dropping and you're channeling somewhat, but the falls aren't there yet, if they do occur. There you go. Anything much lower, I will add. Okay, so a bit lower and I'll buy. I think I'll take some now. Oh, big pop. Out. I can light hedge my former longs just in case it still channels or drops under the low. Out. Big push up. No, we've not got it. So add again at the lows. And he's zapped to the upside and I'm out. Okay, so here's where we get tested. So I've got 0.1 overall over a spread of pips, if you like. How many is that? 380 or something. So I don't really want to add again, and I'll probably look to start to protect if I can. So slow it down a bit. And this is really when you get the best sort of look at how this goes. So because I've taken a lot of gains already, I'm happy to add these hedges. Oh, I probably wouldn't have hedged again that early if I hadn't been so far in gains. So if those two at the bottom go, so there's one. Now what I'll do is I will not add until you get considerably higher, like something like this. So now I've got 0.04 open, which is half my overall long side exposure. So I'm not going to short again unless I get a big pop up because I don't need to at all, to be honest. I'll only short again probably somewhere much higher up here. So therefore we can let the market play a bit. Now we'll actually hold the long for that reason, because the long is a higher size and there isn't a lot in the way until you get there. Okay, bit of rejection, okay. Okay, so I'm going to close that now. I've got $40 there, so I can kill this. And now I've just got this one protective hedge at the bottom. And to be honest, if I close it, then we're still well in gains. And I can just let things run. Okay, and if I want to add another short like this, I can start again and basically reclaim that money I just lost. 49 bucks becomes 45 now. If I want to add long, I can again. I'll do it lightly though, because price is a bit subdued. Okay, so then 49 bucks becomes 36. So I'm referring to the money I just lost closing that hedge at the bottom. 36 becomes 29. $36 becomes 29, becomes 21. So I've almost got the money back. Now this is looking supported. So that becomes now $13 I only lost overall, you could say, because I've worked it out backwards and then $10 or $9, and there you go. I basically got the money back on that failed hedge. Now, I'm happy for a failed hedge to occur because I took the chance of protecting my capital, which is the utmost important thing you can do. If you need to protect, then you have to do it, because if you don't, you run the risk of bust, or a margin call, as some call it. And that's never nice. Okay, so I could probably just kill that as well, and then I could flip long. Now, you can see that I'm adding longs, and then perhaps they are going wrong at times, but ultimately what will happen is you'll just swing back towards the highs, and we will escape those former entries we had. Even if we don't swing back to the highs, I still can afford, if you like, to close out something like this. I can still take that off. So there you go, taking it off, taking the long. So I basically repositioned the long, and now I can buy again because I've got out of that former, and price is still supported. If it drops to lows like this again, I can decide when I want to hedge and how I want to hedge and what I want to hedge, like this. There you go. So I'm protected if it falls. I can now take that, which obviously isn't a lot, but like I said, it does add up. Okay. So at all times you can see my equity is always positive, whereas a lot of traders, typically those who lose money, their equity is almost always negative and growing negative. And that is obviously just unsustainable, isn't it? So because of the hit rate and because I'm hedging and because my sizes are, decent, I don't have to worry about negative equity particularly. I mean, it might drop negative at times, okay, like it almost has, and it might. But like I said, I can always protect in the meantime. Okay, so I've hedged one. If it pops higher, I can remove this. There you go. So nice gains there. All right, now I've got the choice. Do I want to hedge or not? Now, if I'm trying to end the cycle, I would typically close that, and then I would let it run, see where you get. So you're now back to lows. Now you're back up. Now I've got the choice. Do I want to hedge? Now, like I said, if I'm trying to end the cycle, then I probably wouldn't hedge if it's unnecessary. But at this point, so I can now look to end it like this. So close that, and now I'm just waiting for a pop on that sentiment supported price. Okay. Obviously, I could have hedged and hedged and hedged all of this still. But like I said, if I want to exit trading the asset, then I would probably have to kill everything off. I could technically do that now. Okay. Because obviously I've got the gains to do it. I mean, if I just start doing this, you can see that now if price pops, so I missed it there. Tell you what, I will take it again. If price pops, obviously that's going to be in drawdown, which it isn't at the moment. Okay, so that's really a lesson for anyone who's sort of thinking, well, okay, but you'll be doing this forever. It's not really true. You can see I'm letting price run. I could have taken various gains on both sides, but there you go. So now I can just kill it. So again, I would then add short and continue. But net gains every single time. It doesn't matter how far the market goes, what happens. We've got an extreme hit rate. We're protecting all the time. We add and reduce sensibly, and the drawdown, is positive effectively. Net gains every time. So if you want to learn how to do that on a diverse portfolio on all time frames all day, so you can step up the profits, you will need to go underneath. These are just general sort of risk-averse videos so you can get a feel. Thanks for watching. See you in the next one.